Hello traders, welcome to our weekly analysis for November 27 to December 3rd. So just let me drag it out here. Okay. This week really first thing is that there's a lot of central bank speakers that is about to deliver speaks this week. From Monday we have MPC member Haldent, and we have two FOMC members. Then, follow up, you have Bank of Canada government speaks, Bank of England Carney is gonna speak. So it's quite a lot of government speak. Now let's get into it first. Okay, let me one by one tell you what I'm looking at right now. So first of all, for British pound. Now British pound hasn't changed much yet. We are still dragging by the, I think this one is frozen. But anyway, we're still dragging by the pre-exit negotiation. So that is still the main catalyst for British pound. Now, you might see a lot of economic data, or you might see a lot of members coming out from Bank of England. All those things are important, but not as important as the pre-exit negotiation. The reason is because the deadline is really approaching, and that's really the biggest ticking bomb for British pound. So because of that, sentimentally, it's neutral. Why? Because we don't know how British pound is going to react, and we don't even know how strong or how sustained that reaction is going to be. Now, if you look at all the British pound pair, it's just really hard to see. It seems like in the beginning of October till now, we are still within this. If you look at cable, we're still within this sideways movement. Right? It's a really long 2 months of box, basically. If you draw a rectangle here, it's just really a box, right? Really just a box. So it's hard to trade around the sentiment because it can be short or it can be long, and you just simply don't know. Now, for that being said, fundamentally, I still think it's a negative currency. The very simple reason is because the uncertainty is simply too large. And when you have this kind of political uncertainty, you just most likely you are not going to see a lot of business or investment coming into the country. And it's just not a good thing, as I can mention. It's not a good thing when financially or geopolitically, when a country's political system or political future is uncertain. It's definitely not a good thing for the economy and the business aspect. So because of that, fundamentally, I still think it's a negative currency. But many of you know I did try to trade British pound pairs unsuccessfully. And the reason is because the sentiment is just too hard to determine how strong and how long the direction is going to be. So if you want to sell, first of all, if you want to buy British pound out of a positive sentiment, it's definitely logic, because you will have a lot of retracement that is very strong and very sustained, like what we saw in British pound last week. It's just a continuation of uptrend pretty much in all the pound pair. If you want to sell British pound, the only advice I'll give you is trying to find a much longer degree time frame, so you can have a much higher stop loss. That means you have a less risk to get caught up into this noisy environment, basically, if you want to trade British pound. Tuesday, let's see what else we have. We have a bank test result. Now, Carney is going to speak, but as I mentioned, right now, we don't really expect too much reaction from the economic side. So even Carney might speak, talking about the next, what Bank of England is looking at. All these things will not be as important as the pre-exit negotiation. We're also gonna see another FOMC member speaks, then another FOMC member speak. Then this will be important. Bank of Canada. So this week, if I want to pick one currency that is sort of like a main event, I would say it's Canadian dollar. The reason is because now Bank of Canada is gonna conduct a financial system review, and then we're gonna see government policy speaks. Why is this important? Is because right now, after 2 consecutive rate hike, now I'm very lucky because I'm living in Toronto, right? So I know a lot of information firsthand. So basically, after the 2 rate hike, we already seen real estate market corrected. Now basically, the sale had dropped almost 30%, and comparing now to April of this year, the price has corrected for about 7% already. So what the government or Bank of Canada wants to know is whether the banking system and the financial system can withhold this kind of rate hike. And that's why when Polas speaks will be more important, because he might give you a hint to whether how the government is going to do next year. Now we know for sure we're not going to have any more rate hike from Bank of Canada this year. So 2018 will be much more excited to see whether the hiking cycle is going to continue, or maybe they want to hold on to it, or maybe they might be more dovish, which I don't think is going to happen. So it's just a very interesting direction for Canadian dollar. Now, besides this, we also going to have the OPEC meeting, and the OPEC meeting will determine whether the oil output curb, this output curb agreement, is going to extend it. Right now, the deadline is March 2018 next year. So we want to know whether they're going to extend the agreement. Now, right now, the census is that they are going to extend it for another 9 months, after March. But we don't know whether OPEC member will be agreeable on that. Especially right now, you know what happened in the Middle East is not that stable. You do have the political uncertainty within Saudi Arabia itself, which is the biggest OPEC member. On top of that, right now, Saudi Arabia and Iran once again had escalated their conflict, and all those things is just a big chaotic situation right now. So we don't know whether the OPEC meeting or the result. So right now I'm just telling you the census. But what's going to affect, of course, is the oil market. Now, if you take a look at the oil market, it's already a very steady uptrend. So this looks like a buying into this catalyst. So of course, if they do deliver, we might see another round of buying, or we might see a buy rumor sell fact. I don't think we'll see a sell fact, because this is a more a real economic supply and demand. So if they really continue to curb the oil output, you might see continuation of oil uptrend, and of course that will be very positive for Canadian dollar. Aside from that, Friday you're also going to see a labor market data from Canada and the GDP data. So you see, it's really a very economic catalyst and the micro catalyst for Canadian dollar. Now, for me right now, I'm still very bullish about Canadian dollar. Okay, I wrote it here, fundamentally and sentimentally. Now, if let's just say, if Polas deliver something very hawkish, if OPEC does extend the deal as expected, just these two alone will be very strong sentimentally for Canadian dollar. Then of course, if Friday we're going to have a positive data from Canada labor market and GDP, yes, of course, then Canadian dollar will be a one-way street to go upside. But even if we don't have anything like this, just say if government polos deliver something very dovish, if OPEC fail to sign the agreement, and if the labor market and GDP come out very negative, let's still not change the picture of Canadian dollar fundamentally, right? Canadian dollar fundamentally is still going to be a strong currency, fundamentally speaking, but you will most definitely see a strong selling for Canadian dollar for this week. So whether you are going to, if that's the case, you are going to sell Canadian dollar or you want to buy Canadian dollar at the retracement, that's up to you, right? It's really up to how you look at a pair and what's your game plan. Now, I will talk more detail about it in my trade alert video. Now, I think I mentioned about that. Now, if you are watching this video and you are interested to like a microscope into the market, right now I do publish all the trades I'm looking at, my game plan, things like that in my trade alert video. It's right now it's free. So what you need to do is just go to my website, click the trades, go to this page, and it's a members only. So if you get into it, you will see my daily trade alert. I haven't posted for November 27, which I will do it later. You will see this, and then now that's basically will tell you what I'm looking at. Okay, so let's get into it. And aside from that, for Tuesday, you will also see the financial stability report from New Zealand. Now, my stance for New Zealand dollar hasn't changed much, because the bigger picture is the fact people are lack of confidence over the coalition of New Zealand government right now. So that's the biggest negative sentiment for New Zealand dollar. That doesn't mean the Liberal Party or the new government will do a lousy job. That just means right now the market or the people, the investors, foreign investors are still lack of confidence. And especially the Liberal Party of New Zealand, it's more of an anti-foreign investment. It's more of like it's more liberal, basically, like any other country, right? So it's not as pro-business as the Conservative Party. So that's the biggest negative sentiment. Now, of course, the central bank, RBNZ itself, continue to have the loosen policy. Now, RBNZ is not really dovish, right? Based on their new government and the comment, it's not as dovish as before as government leader, but their policy hasn't changed. It's still very loosened for the monetary pace. That means they are not looking to hike interest rate probably well into 2019. So that means as long as these two important force, one is the government and the other one is the central banks. So as long as the government and the central bank continue to be dovish, then we will see New Zealand dollar continue to be weak. Now, I just want to see if this window works, because it seems like sometimes it froze, Now it looks fine, right? Okay, anyway, that's what I'm looking at right now. So as long as that part exists right here, I still think New Zealand dollar is a fundamental weak currency and a sentimentally weak currency. Okay, that means whatever happened, whatever stability report we might have and things like that, I don't expect much to change the overall position of New Zealand dollar. So that means if we have any rebound of New Zealand dollar, I'm just only looking to sell it even more at the retracement. Okay, that's my game plan. And then, of course, you're gonna see RBNZ government Spencer speaks. Wednesday OPEC meeting, I mentioned about that. Now you're gonna see a preliminary GDP. Look at the census, 3.3%. Interesting about US dollar right now. US dollar, I still think it's fundamentally the strongest currency. Okay, the strongest currency. Sentimentally, not so much, right? And many of you know already, right? It's just been on the news all the time. It's because the uncertainty over the tax reform bill. Now, people don't know whether the tax reform bill is going to work or not. That's the first thing. The second thing is the Russian Gate investigation continues to be a ticking bomb. So these are all the sentimental negativity for US dollar. Now, for that being said, in the long run, of course, fundamentally, economically, it's still very strong currency. And right now, the December rate hike at December 13th is most likely is going to happen. However, because everything has been known and expected, so really what's going to push US dollar for the next month, right now till the end of December, it is going to be the tax reform bill and the Russian Gate. So these two things from the political side is really going to be the main drive. Now, right now, if you look at DAX, it's really not a good picture, right? People are selling it. So not a lot of confidence over US dollar. And how would you like to trade it? Again, it depends on your strategy. You could look at this and decide to go with the flow, sell US dollar, or you could decide to buy US dollar at the retracement. Again, I will talk more about it in my individual trade, but just to let you know, sentimentally, it's not looking well, but fundamentally, it's strong. That means that this kind of GDP data is probably not gonna give too much reaction for the US dollar, right? What's gonna really, all the data or even the Fed member speaks are not going to be as strong as the geopolitical situation we have right now. Okay, that's pretty much. And then when also going to see business confidence from New Zealand, last time we have a minus number, and it's very interesting because it came right after the election, right? So before the election, everything was okay, and then September, the Liberal government suddenly and surprisingly became the new government of New Zealand. Now you have a -10, right? So that's just to show you. That doesn't mean we will have the negative number this time, but it just show you how inconfident, how much lack of confidence that the market had towards the new government. We're also going to see a private capital expenditure for Aussie. And Aussie, did I mention about Aussie? Okay, Aussie right now is still a neutral currency. Okay, so nothing has changed for Aussie. It's still a neutral currency. It is neutral because it's dovish from the central bank. So RBA, although it's not really dovish, but in comparison with other central bank where everybody else is hiking and RBA is really not looking to hike interest rate, maybe until 2019, possibly. It put them in a dovish position. But they have two reasons to be strong. One is their underlying economy is not bad. Okay, it's flat, but it is looking to the upside. So it's not that they are in a recession or like anything like that. They're actually doing well, especially the correlation with China and Australia. Now China is still booming. There's a lot of debt worries over the Chinese economy, but it's still booming to the uptrend. Second thing is the commodity market is generally still well supported for Aussie. So they basically hedge out each other, and that's why it's a neutral currency, both fundamentally and sentimentally. So because of that, the small fundamental data like capital expenditure, it can be tradable for a short-term trade, but in a more long-term perspective, Aussie will be interesting to pair up. For example, if US dollar continue to drop, then obviously Aussie will be a very good pair to buy Aussie dollar. Same thing as Aussie New Zealand or Aussie yen. But this kind of trade is really sentimentally played, so you do have to know that the sentiment can change. So it's not really my favorite play unless I have something like I really like to buy something that has a fundamental strength, because then it's more safer for a swing trade perspective. If you want to buy Aussie this week, let's just say you're interested in to buy Aussie dollar, which right now is not looking too well in a longer degree time frame. Well, unless you zoom out. But let's just say if you want to buy Aussie dollar in this very short-term trade right here. Okay, if you say, okay, I'm just looking at this very small cycle right now from here to here, looks like it's gonna break the upside, things like that. You could buy Aussie dollar, but just remember, US dollar is still a very fundamentally strong currency. And right now the selling was purely from the sentiment. That means if we have any good news from the tax reform bill, we might see a dollar rebound to the upside, right? Just something to keep into a consideration. Thursday, you have the Eurozone inflation data. Everything's looking to be positive. Euro is one of the biggest winner last week. But if you look at Euro, really internally, not much going on, because ECB, again, like I keep mentioning, as long as the ECB continue their current monetary stance, it's not dovish or hawkish, right? It's just neutral. Now, beginning of last week, over the weekend, we did have a negative news from Germany because the coalition or the attempt to form the coalition government had failed. But that didn't change the overall picture for Euro, right? Euro right now, it's not, even the Catalonia events, it's not big enough to shake the market, okay? So what's gonna drive Euro is nothing to do with Euro itself, because Euro right now is just a very neutral currency. It's fundamentally recovering well, looking to the upside. Sentimentally, nothing has changed. It's very stable. That means what's gonna change Euro to the upside or downside, it's depend on the pair that Euro is paired up with. So last week you saw a huge, let's say you see uptrend Euro New Z. That's because New Zealand dollar is very weak. Same as Euro Pound, same as Euro Dollar. So there's, again, currency market is really in a comparison stance, right? So sometimes when you see a pair goes up, it's not necessary that one of the currency is very strong. It could be that the other currency is very weak. So that's most likely the case for Euro right now. That means if this week we continue to have a weakness over dollar or pound or New Z or even yen, you could buy Euro against those pairs, but just understand you're doing in the short-term sentimental play. Now, of course, this inflation data is going to either give Euro another boost or it's going to stop its uptrend. Finally, Friday, we're going to see the labor market and GDP data from Canada. Also going to see manufacturing PMI, but as I mentioned, not really a big deal for British pound right now. If you want to trade British pound, just focus on the British exit negotiation. That's going to be the main drive. Okay, so just to recap, this week, although there's a lot of central bankers speaks, really what I'm looking at right now, Aussie is still a neutral currency for me. CAD looking to buy, but this week there are three catalysts. There's OPEC meeting, there's a government poll loss speaks, and there's a labor market data and GDP data. So it will be interesting to see how the sentiment is going to shift for Canadian dollar. But fundamentally, it's still a very strong currency. Euro, it's basically a neutral currency. Right now, it's sentimentally strong because all other major currencies are weak right now. What happened to Euro CAD then? I don't really know. Let's take a look at Euro CAD. I'm just curious. Okay, so you see, even Euro CAD is a winning battle for Euro. So that's just to show you how strong Euro is. Okay, so pound is again fundamentally weak, but it not necessarily means I will sell it, because right now sentiment is very neutral, and it's just very hard for me to trade British pound, to be honest with you. It's hard to see where the sentiment is going. It's even harder to see how sustained or how long that sentiment is going to be. New Z will be a much easy pair or currency to short, because right now the weakness come directly from the central bank and the government, and this is the two biggest drive for any financial market. So as long as these two institute remain to be negative for the country or the currency, we will expect to see continuation of downtrend for New Z. And of course, it comes down to dollar is a very interesting currency because fundamentally it's strong, but the sentiment is just very volatile. And this week, we will continue to expect the geopolitical events to be the main dominant or the main momentum for US dollar. We have to see how the tax reform is going to be, and if we have any more negative news coming from the Russian gate. Now, for Japanese yen and Swiss franc, really nothing much to update. They are still fundamentally weak, but sentimentally neutral. So you do have to watch out for the overall sentiment. Okay, that's pretty much what I have for this week. A quick sneak peek that, just to let you know, next week you do have the rate decision from RBA, but we don't expect much. Then you will have Bank of Canada decision on Wednesday for next week. That means government polos will give a more hint, but we really don't expect any more hike, right, for this year. And next week, you also have the non-farm payroll. Now, I thought the non-farm payroll is going to be this week, but it's actually next week. Okay, so that's it for this weekly analysis. If you are interested to practice trading, or you wanted to know more about how to really apply all the knowledge fundamentally to an individual trade, again, you can take this advantage to learn to trade it, because I am going to publish what I'm looking at or many of the trades that I'm currently either looking at or trading at my website. Okay, you do have to sign up. It's free, but you do have to sign up because the video is unlisted. So you do need to be a member in order to watch it. All right, so that's pretty much it for now. Hope you have a wonderful week of trading. Play safe. If you have any question, please do let me know. All right, thanks for watching. Bye-bye.